today's episode of Canadian Mortgage Weekly. We're so excited to have you guys with us this morning. My name is Sam Thompson, and we are joined this morning with Joe Bladdock. How are you doing today, Joe? Thank you so much for being on today's video.
Oh, I'm doing pretty good, Sam. Thanks for asking. And how are you doing today?
I'm doing great. It's we're into September now. It feels like,
Yeah.
we're getting close to that year mark since we started doing these videos. The days are getting a bit cooler, which is nice.
Yeah, they are. It's one of those things where the sun starts to come up a little later and go down a little sooner. I think someone was telling me that we're already down by about an hour and a half of daylight compared to the high
Wow.
point in the summer. So yeah, time to get the vitamin D,
That's right.
the vitamin D supplements.
Mhm.
Yeah, so definitely a lot of time I'm trying to spend outside and trying to get as much sun as possible. How about yourself?
Yeah, exactly. The same here. And enjoying traffic before we get into back to school. There's school buses out
Yes,
and running. I think that
absolutely.
starts next week. We're heading into Labor Day weekend. So,
Yeah.
trying to enjoy this last weekend, I guess, of summer before we officially get back into the school routine and all of that.
It is a very, very big change that's coming up, and I'm sure you all viewers who are looking, watching the show, you're probably wondering, did I get enough clothes or supplies for my kids for back to school? And do I still need to do some last minute shopping? Or, but once that's all out of the way, I mean, it'll be a good time to start house hunting.
That's right. Yeah. I find it picks up quite a bit in the fall.
It really does, yeah. And with that, we find that once everyone's got their kids back at school and everyone is back in a routine, it's a good time to start making some decisions like that.
Mhm.
Yeah. But anyway, on with our show today. I just wanted to start off by the news section here today. And that would be that we're just wanting to remind everyone today that we have a Bank of Canada interest rate announcement coming up really shortly. And that will be on September the 8th, which is a Wednesday. So, Sam, that's coming up in about a week and a half from now.
Yeah, that's right. Next Wednesday, the interest rate announcement. So that's important for anybody watching or tuning in this morning that has a variable rate mortgage or even any variable rate loan. So it'll be great to join us live that morning. I think we typically go live at around 10:30. The announcement's
That's
made
right.
at 10. So stay tuned for that video where we can cover off any changes that are made and how that would affect you in your variable mortgage.
Exactly. It's going to be a good episode, so stay tuned for that. Another news item that we wanted to cover off on Canadian Mortgage Weekly this week is that we have an election coming up in Canada,
Yeah.
and that is a pretty big deal, especially with what's happening with the housing market. There's a lot of people concerned about, housing supply. And as you know, Sam, there's a lot of different party platforms that have been presented.
There is. I think it's a huge concern for people going into this election, or at least something that is very prominent as we're seeing. A lot of people are naming it a housing crisis, where it is hard to, even achieve rent in some places. So we did a video last week on Thursday covering off all of the different parties' housing platforms for the upcoming election. We just want everyone to be informed on what each party stands for, what their proposed plans are for the future. So if you did not catch that video, you can find it on our YouTube or on our Facebook page for the last week.
That's awesome. Thanks very much for that reference, Sam. We did a real good rundown with all the platforms that Sam is mentioning. So any details that you're looking for, definitely check out our last episode. But just as we go into this episode, make sure you do your research and get out there and vote. The best thing you can do is just to vote for someone. It's going to give you a voice for this month. But last item for news is that, well, with the Bank of Canada interest rate announcement coming up, that will help determine variable rates.
Right.
But what about fixed rates? Where are they headed? And that's a completely different ballgame. And for fixed rates in Canada, they're closely tied to the bond yield. And Sam and I have been watching the bond yield, and Sam, it's been tightening. It's been going down a little bit. It's been going up a little bit. It's been going down a little bit,
Mhm.
but it's just getting ever so tightening. And I think the caveat will be this September. What will happen? And we'll see a deviation from, I think, that point in September. But what all the economists are saying, and I'm sure you've heard this too, Sam, is that once September hits, they'll start to just roll again in real estate.
Absolutely, yeah. We've been keeping a tight watch on what the yield is doing, and we've been seeing the range tightening. It's looking like we looked at it this morning that it's on a downward trend. But as you're saying, it'll be interesting to see what this fall has in store for the rates and for the markets in general, because as you're saying, we've been foretold by a few high level economists that this fall is going to be I believe they refer to it as a slingshot, where we've seen a bit of a lull over the summer.
Yeah.
So rocketing into the fall, we'll see what that has in store.
Yeah, definitely. We've seen the lull over the summer, but yeah, really looking forward to seeing what the fall has in store. It always keeps what we're doing very exciting, and never the same day twice. So,
That's right.
it's one of those things. But stay tuned for next week's episode as we dive more into what's going on with rates. But before we do that, I wanted to just introduce Sam here for paying off the mortgage faster. We are going to cover off 5 different ways
Mhm.
to pay off your mortgage faster. So, Sam, you put together this presentation for us today, and wanted to see if we can get that started. I'm sure a lot of people are looking uh, for different ways to pay off their mortgage faster. Mortgages have become so much larger these days, so this is
Mhm.
an ever growing need from what I see.
Absolutely. I mean, a lot of the articles that we've been seeing have been stating that, you're no longer getting a mortgage under your max amount. Almost every mortgage that we process, we're pushing the ratios as high as we can. So really, yeah, like you're saying, even first-time buyers, even return buyers that are maybe refinancing or selling and buying a new one, a lot of the cases we are pushing the mortgage to the maximum that their income and their
Yeah.
qualifications can hold.
Yeah. So with that, definitely we want to put out some strategies out there for all all homeowners across Canada for different ways you can pay off your mortgage faster. So I think we should just dive into the presentation today, and we can go through that together.
Sounds good. Let's get into it. Alrighty. So yes, paying down your mortgage faster. We all want to be in the mountains, mortgage free. Episode 37. So again, just as we were chatting about, getting into the market is such an exciting process. You're officially a homeowner, or maybe you've refinanced, you've consolidated some debt, and that's usually a huge benchmark and a huge cause for celebration because you're in the market. But for some Canadians, especially as we're saying, where everyone is getting pushed to that maximum loan amount that they can get possible, it can be a bit daunting to have that mortgage loan hanging over your head, knowing that you have to repay it over maybe the next 25 years.
Yeah, exactly. I remember when I first got my first home, Sam, the
Mhm.
mortgage seemed very large for the amount of money I had borrowed in the past. But since then, it's become much more larger. So definitely, there's different ways to get ahead on your mortgage,
Mhm.
and we're going to cover off 5 different ways to pay off your mortgage faster in this episode. And I think, Sam, you have a special tip at the end too,
We
uh,
do.
like a bonus tip.
We do. Alrighty. So let's go in. If you have your pens and paper handy to take some notes, our first tip this morning is going to be about payment frequency. So this is probably the easiest way to pay your mortgage off faster. We often discuss in a lot of our pre-approval appointments, or when we're putting together your mortgage application, what payment frequency you want to go with. A lot of people like the security of, this is just a monthly amount. It's
Yeah.
familiar because you're used to likely paying rent once a month. So that's what they stick with. But by increasing that frequency of payments being made, you can actually pay your mortgage off faster and save interest in the process.
You really can. And I know that this is something that Sam, we teach at our first time buyer webinars as well. I mean, bi-weekly payments are going to get you there quicker than monthly payments, and even
Yeah.
weekly payments will get you there even quicker. But just by going from monthly to bi-weekly, that will put down 26 payments a year. And essentially what that does is it allows you to do an extra principal payment each year, so an extra full month's principal payment on your mortgage. So it definitely decreases your mortgage term. I think from what I remember, a 30-year mortgage, just by choosing a accelerated biweekly, can shave it down by 2.4 years.
Wow.
um, from what I remember, but
Mhm.
could be different on every single mortgage size, of course. But definitely biweekly is good, and then weekly just takes it that much further.
That's right. Yeah. And especially as you mentioned, getting an accelerated biweekly or weekly, it's again a bit more aggressive strategy for paying your mortgage off. But, it may not sound like a lot to a lot of our viewers of 26 payments, adding an extra month of payments per year. But when you're compounding that over the entire life of the mortgage, as you're saying, Joe, that could shave off, almost over 2 years in mortgage repayment, as well as those interest charge, because the principal's it's calculated as less at the end of every year.
You bet. Yeah. And you're just making those payments that much sooner with the biweekly payment coming that much sooner, and the
Mhm.
weekly payment you're right. It just stops that interest from accumulating as quickly.
Mhm. And another option as we move on is going to be making some lump sum payments. So this is, most mortgage loans that we have are closed. So this is a prepayment privilege that is, available for you to make a lump sum payment directly to the principal. So that's the exciting part, is that, all of the money that you're dropping goes directly to principal. It doesn't get divvied into interest, principal, like your monthly or biweekly payments, which that can really have a huge lasting effect over the life of the mortgage.
It really can, yes. When you do the lump sum, especially if you're looking at your amortization schedule, just doing a lump sum payment will skip all those scheduled interest payments and bump you
Mhm.
down further down your amortization schedule. I know it's really hard for me to illustrate that here over the video presentation, but
Mhm.
when I'm when we meet with clients to talk about their mortgage when we're signing with them, just when we look at over their amortization schedule, we like to point that out. If you do a $1,000 lump sum, you're not going to just bring your mortgage down that much, but you're also
Mhm.
going to skip those scheduled interest payments as well. So definitely it can save you a lot and does have a lasting effect, because those interest payments that you skipped, you're paying less interest going forward.
That's right. Yeah, it's not necessarily about the direct amount that you're paying your principal down at the lump sum payment, but again, it's that compounded interest effect that we see trickle down
Yeah.
over the life of the mortgage that really results in some pretty big savings,
It,
especially earlier in the mortgage for sure.
It really does. Yeah. If you do it earlier in the mortgage, like you're saying, Sam, your principal balance will be brought down quite considerably right at the very beginning. So the overall amount of interest will be much less because it's based on the lower loan amount. And another thing you can do, just so we can continue on with
Mhm.
that, is to also uh, explore different lump sum payment options with your mortgage broker or with us when you're speaking about your mortgage, because some allow 10%, some allow 15%. But if you need more, we can incorporate a larger lump sum
Mhm.
uh, privilege ahead of time, as long as we know that's something that is important to you.
Absolutely. Yeah, it's definitely something that we go over um, in your prepayment privileges as we're signing the commitment. Is when we do any of our signing appointments, we'll go through each page with you, and one of them will outline all of your prepayment privileges. And speaking of prepayment privileges, it's a real tongue twister.
It really
And
is.
another one that's available for you is to increase your payments. So again, keeping the same frequency. Some lenders label it as like a double up system, but you can increase the amount of money that you make on each payment, which again is just putting more money down each payment and can save you money on interest and pay off the mortgage faster.
Exactly. And this can be done in such a way so it's automated. You can
Mm.
set up your payments. So if you're making a $1,000 a month payment on your mortgage currently, but you want to add as low as $200, for example, to that payment, the lender can automatically take out that extra $200 every payment, as long as it fits in within that privilege that we've incorporated in for you.
Mhm.
And I see here that, Sam, you've calculated that if you do add $200 to your current payments over the life of the mortgage, you would save about $27,000. So that is really good.
Yeah, exactly. This illustration was based on a monthly payment. But when you think about it, it really doesn't equate to that much each month when you look at the amount you save over time. And for an example, we see clients do this if they receive a raise at work. They
Yes.
get promoted to a higher position. Maybe their spouse is returning to work and can contribute extra funds. So they just have a higher cash flow. And then rather than, using that extra $200 a month to get takeout, if you put
Yes.
that added to your existing mortgage payments, then really it does result in, almost $30,000 of savings over the life of your mortgage. So it's really quite effective strategy at paying your mortgage off faster.
Yeah, exactly. That's the hard part, though, Sam. I think that a lot of us would love to do the takeout and the mortgage too,
Mhm.
but then do we want our cake and eat it too? Maybe sometimes we need to decide to pay down the mortgage a little bit as well. But
Mhm.
definitely a good strategy and something that will get your mortgage down really quick here. And as we're going through these strategies, everyone, if anyone has a question, just pop it below in the comments. We're live today just to let everyone know. We'd love to take your questions or send us a private message. Maybe you have your own mortgage and you want us to put together a specialized pay down plan for you. You definitely contact us so we can look into that.
Yeah, for
Yeah.
sure.
But yeah, so number 4, what do we have next?
Number four is refinancing or renewing into a lower rate.
Hmm.
So this is a big one. We've done a lot of videos in the past about refinancing for more money if you're doing renovations or something like that. But also if you're able to refinance or you reach the maturity date, end of your term, you're looking to renew and you can get into a lower rate. The way that you can sort of hack this so that you pay less is just by keeping your payments the same.
Yes, you really can do that. And when you're refinancing, it's as simple as talking to your mortgage professional to make sure that they understand that when you're refinancing, you would like to keep your payments the same. Typically, what we need to do on our end is to adjust the amortization so it customly matches your current payment. So we can make sure that not only is your payment going to stay the same, but your mortgage will now be paid down much quicker because of that lower rate.
Yeah, and it's again one of those have your cake and eat it too scenarios where you're thinking
Yeah.
for a lower rate, we could continue on our same schedule. We can make payments that are actually lower because the rate is lower. Even on a refinance, you can extend your amortization to 30 if you really need those extra funds. But by keeping it aggressive and keeping those same payments at a lower rate, you'll find you're spending less towards the principal, and it does pay your mortgage down faster. And this point actually segues quite nicely into our last and final point, which is just shortening your amortization period. As Joe was mentioning, this does have a really big effect on how much you pay and paying it off faster.
Yeah, it really does. And some of these tips and strategies can overlap with one another. But in this one, typically when you're buying a home, with 5% down, you're going to get a mortgage with a maximum of 25 years. But if you can swing it, you can shorten that down to 20 years, 15 years, 10 years, 5 years. There's different ways that we can help you achieve that. Even with a closed mortgage product, there's different ways that you can really bring down that amortization. But in this case, we try to always work with our clients to see what they're comfortable with. Sometimes the client yourself might be comfortable with taking 25 years initially, but then once you're settled in your new home, want to speed up those payments, and we can help you with that.
Yeah, and as an example, we've looked at a 25-year amortization versus a 20-year, and you'll see that after the first 5 years, which is a typical term, after first term on a 25-year amortization, typically you're paying off about 18% of your mortgage versus a 20-year, which is only 5 years shorter. After that 5-year term, it actually increases that from 18 to 24% off. So when you're looking at, the total mortgage balance, the total principal loan, and you're taking it from 18% to 24%, that is a considerable amount of savings.
Yeah, absolutely. It's a considerable amount of savings. And that's something that, if you can swing it at the very beginning of your mortgage, you'll make the most benefit for yourself simply by saving all that interest and bringing that mortgage down that much quicker. But yeah, that's a fantastic stat because 25 years, you're going to pay off just less than the fifth of your mortgage. But if you do 20 years, you're almost at a quarter of your mortgage right there. That's a big jump. That's a really big jump. So that's a really good strategy.
Yeah, absolutely. So that rounds off the 5 points that we had put together for paying off your mortgage faster through refinancing to a lower rate, shortening your amortization, increasing your payment amount or frequency. But we do also have an extra, bonus mortgage tip. If you're seeing some of these and thinking, well, obviously putting more money towards the mortgage is going to help me, but how do I get there? So to pay it off faster and using these, some may see them as more of an aggressive strategy, adding a rental unit to some or all of your property can help give you that cash flow to make these accelerated payments and pay it off faster.
Yeah, it really can. And it's something that a lot of couples are doing right now when they're buying a new home for themselves, or, just if you're single, it really helps out as well. But just taking on a tenant and just taking that money to help with the expenses of your mortgage and just putting that money on top of your mortgage, using that as the prepayment, because that's extra money coming into your home. And perhaps you don't want a long-term tenant, you just want to Airbnb out a bedroom on the weekends. That's extra money, and that could add up to the $200 that you were talking about in your previous example.
That's right. Yeah, there's a lot of ways that you can allow your home to work for you. I think when we look at the mortgage, it is a great tool, to have that saving and have a secured place that you're making those payments. But especially like you're saying, if it's a big enough home, maybe you're a young couple, you don't take up that much space yet. Adding that rental unit can definitely get you ahead of the curve right out the gate, from starting your home journey and your mortgage process. But we do want to make sure that you're aware that this strategy also does have tax implications. So any of the rental income that you receive per year, you will have to pay some of that on your income tax for the following year.
Yeah, it is something that is a little bit of a negative, but usually with claiming rental income, you can also claim the expenses that you've incurred to generate that rental income, which are typically some utility bills, a portion of those, and the repairs that you make on the property, which is also your property. So it's only a portion of those. And then you also have to look at capital gains when you sell your property down the line, because you'll have used it to generate income. So the government will want a portion of that, but it's still all split. So it's good to talk to your tax preparer or accountant or whoever
Mhm.
you're dealing with to make sure that you come up with the correct figure and they can plan with you accordingly for that.
Mhm. Yeah,
Yeah,
absolutely. Well, I think we've covered off a lot of really good points.
we have.
Some ways to, pay it off faster, some strategies to get there. We don't want you to enter the market, feeling, bittersweet, kind of deflated that you have this now huge loan, but also are in the market. So definitely they should reach out to us, right, Joe, to see, we can
Yes.
answer any questions. We can see what they qualify for, get them pre-approved. In that call, we can chat about, all the different mortgage payment options. A lot of the calls we go through, we do refer a lot to, what the payment would be monthly, what the payment would look like bi-weekly, and we can start, developing some strategies and customizing that for you.
We really can. And if you're in that position, it would be a great time to give us a shout to get started. We can walk you through over a video call, phone call, or even over email if that's something that you prefer. And a lot of our clients do prefer to do things over email these days, which seems to be easier for them just because it's on your time schedule and we can get back to you pretty quickly that way as well, and we can put together your mortgage pre-approval and also on the other side work with you to help get that mortgage paid down quickly through one or many of these strategies, and hopefully get you mortgage free faster.
Mhm.
Yeah, but just thank you to all of you who continually watch our episode, Canadian Mortgage Weekly, Canada's source for mortgage news and
Mhm.
topics. Just wanted to take a moment to Sam Thompson. Sam Thompson is a mortgage professional in the Barrie area. He's married and moved to Ottawa just over a year and a half ago. He's really been a good part of the team here at Mega Mortgage. And Sam, I just want to say thanks for joining us on the show today.
Yeah, thank you for having me. And again, it's great to have you on, Joe. For anyone who doesn't know Joe, Joe, you're a mortgage broker in the Barrie Simcoe area. You live up in Aurelia,
Yeah.
with your family. You got two kids. I'm sure that they're already back to school with the homeschool, so it's a busy household, I'm sure. But Joe is the man for mortgage information, and definitely, yeah. Thank you so much for being on today's video, Joe.
Yeah, it's always a pleasure, Sam. So, for all you viewers out there, I want to take a moment and thank you for watching episode 37. Watch out for next week's episode, episode 38. We'll cover off the interest rate announcement, and then we'll have a follow up episode on Thursday for the week's topic. So, join us then, and thanks for watching.